Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Hello everybody, this is Coach D with TackleTrading.com, here to give you a quick market update and overview, and just taking a look at the market in general. You can see as we trade around the world, Asia a little bit up, European market down, U.S. markets up. We recover a little bit after last week's sell-off. If you want to take a quick look at a heat map, you can get an idea of how the overall market is looking there. And, a little bit of green here, nothing crazy hot, but if you take a quick look at the S&P index, let's jump in and take a look at the S&P index. And the market this week, we expect it to be really, really quiet. In fact, this time of year is traditionally, very, very quiet, low volume, but I just wanted to show you something real quick here. Just to help you plan out your holidays and maximize your cash flow. I went to the New York Stock Exchange and just looked up their holiday schedule. And, this isn't anything new or exciting, but this year, the Christmas holiday falls on a Friday. And if the Christmas Eve is an abbreviated session, so half-day session closes at 1, I believe. And that falls on a Friday. And then also New Year's Eve, New Year's Day falls on Friday. And if you look at this week's worth of trading leading up, we really are kind of at the point where this week's trading is going to be pretty light. I expect very, very little to no volume. You've got a stretch of 1, 2, 3, 4 days, if you include the Christmas Eve, where you're not going to get any, little to no market activity on the 24th. 25th, market's closed. 26th, Saturday, Sunday, of Theta. So this is the perfect time of year to build up the Theta. And then between Christmas and New Year's Day, which falls on a Friday, this week is usually so quiet, usually just dead quiet, nothing crazy, low volume, low volatility, markets don't move much. So build up the Theta. We love the Theta this time of year. And Theta Clause is coming to town. So keep that in mind and make sure you build up that Theta in those portfolios to maximize your gains. Now, keep in mind that come January 4th, first trading day, January 4th, is when you will see the market usually pick a direction. It'll usually make up its mind and start running one way or the other. And the January barometer, remember, is the way the market sets a tone for the month of January. Is kind of a good forecasting mechanism for the year. So now, here we are looking at the S&P index and E-mini S&P, and the market overall kind of big picture here is sitting on lower highs through here and relatively well-established known support zone in the 2,000 ballpark. And then last week we saw the market whipsaw. If we zoom in on that real quick here, we can see where the market last week, after the FOMC meeting, reversed right here. So we got the Monday hammer at the known support zone. Market put in a nice little rally in anticipation of the Fed. And then Wednesday was really quiet, and it ripped up after the Fed meetings, shot up, and then the next day it kind of continued to trickle a little higher, but then gave it all back up, closed down, and put in this big bearish engulfing candlestick here, closed at the lows, and then Friday session closed down near the lows, really big down to finish out the week. So it basically gave up the week's gains and put us right back in that support zone. And again, did so on pretty good volume. But now look, the volume today is lower than average, and it's a little bit higher than you saw like Thanksgiving. But I expect to see volume here, taper, continue to taper, be quiet, and then next week we'll see it down in these holiday type levels. You just don't see a lot of volume. It'll be pretty quiet. You occasionally see some jockeying for position at the end of the year, but as far as the market goes, if this support zone breaks, we need to watch out. You'll also notice that the S&P is trading below all of the moving averages here. So it's below the 200. That's the black one there. So there's the 200 period moving average right in there. And then you got the 50 period moving average coming through here. And then you got the 20 period moving average, and they're getting to the point where they're all converging, and that's where you see, those are some crossing signals people look for. That's definitely a sign of a transitioning trend, which we know that's nothing new, and this is a key support zone now because of that. So if that breaks, there's a lot of stop orders down here, and it'll bring in a lot of bearish activity. So that's probably the only thing I think we would see that would increase volatility in the market would be a drop if it broke. But I wouldn't be surprised if it just kind of meandered in here a little bit. And just for the next couple of days, don't expect any major market movement. And that's really the same story across the board on all the other major market indices. So if you look at the NASDAQ, also very, very similar. It's above the 200 period moving average, and it's been the stronger of the bunch. But again, sitting at the last support zone, putting in the kind of bullish Harami style candle. The Dow actually made a slightly lower low, and it's head and shoulders or triple top looking. If you want to really break it down, it's slightly lower low, but you've got a triple top and a potential breakdown through that support zone. So looking pretty consistent on that on the NASDAQ. The Russell 2000 is a little bit lower, it being the small cap stocks. You're seeing actually also trading below its major moving averages and actually having established a lower low big picture context, and then another double top breakdown kiss goodbye scenario right there. So that's also where you're seeing a little bit of more bearishness on the Russell. And then let's take a look at the dollar index. And let me go eliminate those drawings. And with the FOMC last week, it put in a bottom, and we've reversed up. Now we're seeing some of that, giving that back up. So I really see in here possible lower high. It could turn into an inverted head and shoulders there and run up. But these are some benchmarks, really significant benchmarks for the dollar index. So it's kind of in a smack dab between the near-term support and resistance. And I'd suspect a continued rise with the interest rate increase. That should increase some of the strength of the dollar a little bit. And we'll keep an eye on that. The only major news or economic announcement I really see on the horizon is the update to the GDP. So that's really all we have coming out this week. Otherwise, we'll keep you updated each day. Again, this is Coach D with TackleTrading.com. Hoping that you and yours are enjoying this time of year, that you're getting to spend time with your family and loved ones, and that everybody certainly enjoys the holidays in relative safety, and that they enjoy themselves. Make sure you build up the theta in those portfolios, and of course, don't neglect them during the holidays. Don't neglect the market, but keep your eye on it using alerts so that you can focus on family.
Isn't it time you got off the sidelines and tackled trading? Join our online community of active traders where we make it happen every day. Stocks, options, futures, and Forex at www.tackletrading.com. Get in the game.